Good morning, everybody. Good morning, YouTube. Good morning, Jackson. Jackson, do you want a treat? Well, come here. You got to get a treat. I got a treat for you. Come on. Come in. You have to get a treat. Oh, what a good dog. This doggy's so good. That's the only way I ever get any attention from him or get him to appear on the show is to keep treats up here. All right, guys. Well, it looks like Bitcoin's down a little bit this morning. Market's pretty flat. Dow's actually up, but the S&P is barely off, and the NASDAQ's off about 0.5%. All right, so let's get in the middle of this. Let's look at charts, and then we'll look at some ETFs. We'll talk about my new video this morning. How are you doing, Bank Account Bonus Central? Appreciate you for being here. I made a video. I was up late working on a video last night that I'm really proud of. I thought it was a good video. I typed out a script and everything. For me, it was a good video. I used slides and typed out a script. Anyway, I don't know how well received it'll be. I think a lot of people don't want to hear the truth or whatever, but that's fine. That is fine. All right. So, well, let's just start with the market. Let's just start with the darn market. All right, so here we have it. Gosh darn it, that's not good. Anyway, Bitcoin got up to about 89 yesterday, got ahead of its skis. Hopefully it'll fall back into this trading range at 87. It'll revert to this mean and build a base here. If not, it'll probably revert to this lower mean. We'll see. We'll take that one day at a time. And if we can make a higher low, that'd be good. I'm not going to worry about it. We can't predict the future. Let's look at S&P futures. These trade 24 hours just like Bitcoin. I mean, there's this yellow zone on the chart. I expected sellers to be there after the bloodbath of the post NVIDIA earnings. People couldn't sell it fast enough. Some people didn't get their orders filled. I would expect sellers to be there, especially the first time. But I don't know. Maybe we've chewed through maybe we've got all the sell orders out of the way. I don't know, but this thing is guilty until proven innocent. And right now it's looking guilty to me. So looking like nothing's changed so far. We made a lower high. However, so far we've made a higher low also. So maybe we're making a wedge, the old atomic wedgie pattern. All right, so let's look at the NQs, which is the 24-hour chart of the NASDAQ, or 23 hours. It trades 23 hours a day, 5 days a week. NASDAQ and S&P futures. I don't know why it doesn't trade 24 hours like everything, or like Bitcoin does. Anyway, this thing, same situation. The area where the bull trap from the NVIDIA day left behind some sellers, I think. And so far, they're still in that same trapping area. We'll see. The bullish case is hopefully it just is checking this mean down here at 24, this high volume node. Hopefully it doesn't go any lower. Hopefully it makes a higher low, and that would be fine. We've made a lower high also, but maybe we need to build a base. Let's look at the Qs. Well, the Qs had a little gap down from yesterday's close, but it's a small gap. Anyway, we're trading within yesterday's range, so that's the neutral case. If we fall out of yesterday's range underneath it, that's obviously bearish. But if we're in yesterday's range, that's somewhat neutral. And of course, the bulls want to get it above yesterday's range. On the SPY, the bulls really want to get it over this moving average and get it up here into this point of control at 672, this higher trading range. So we'll see. All right, so now let's go to the diversified divas. These are the funds I love to follow, these hedge fund style funds. Blocks, ULTI from Rex, K Yield from Curve, WPay, QLDY, LFGY, GPTY, Chippies. And then we have the SPY and the Qs on here for comparison purposes. Okay, well, you can see right now Blocks is protecting capital better than most of them. Not quite as well as QLDY. That's why I like ULTY from YieldMax so much. They do a great job protecting capital on down days. This isn't a huge down day, but so far, it's hitting Blocks. Blocks is down 5.3%. Blocks is pretty heavily levered to Bitcoin, and Bitcoin right now is down about 2%. And so Blocks is picking up some downside convexity on Bitcoin's move. Anyway, that's fine. They got upside convexity on Bitcoin's up move yesterday. Right now, Bitcoin's trading 86,490, and that is down 2.74%. So do we look at the Bitcoin chart? Anyway, whatever, it's down. But that's weighing on all of these. The ones that are doing the best are, of course, the Qs, QLDY, and then ULTY. And then the other ones are dropping off quite a bit. ULTY is down 1.6, WPay is down 2.38. WPay paid a dividend today. We can look at that in a second, but that's good. That's the only one of these funds that went ex-dividend today, but I've added the dividend back into the price. So in any event, you can take a look back at just kind of a 30,000 foot view or whatever, and you can see this day is looking kind of like some of these days we had last week, which weren't great, not looking near as good as yesterday. Anyway, but let's look at the rolling total return. That's what matters. If you put in, say, $10,000 into these funds, and you factor in the dividends, not drip. I'm not counting the drip, but if you just factor the dividends into the return, you can see right now the worst performing one is ULTI, but it's improved a little bit. It's off its lows. Blocks is also down about 26% in the month of November. This right here is October 31st, so this is basically all of November. Then we can see ULTY down about 15.8. K yield down about 14. WPay doing a good job, only down 13. Great job, WPay. Of course, QLDY is only down 5. That thing's a beast. I need to get more of that. LFGY is down 18. GPTY is down 10.9. That one's a beast too, as well. Anyway, but for comparison purposes, the SPY is down 2% over the same time frame. The Qs are down 4.5%. It's more fair to compare these to the Qs because these are mainly tech and Bitcoin. So, but in any event, even QLDY is down a little bit more than the Qs, but not a whole lot. All right, we have a CNBC exclusive. Dick's Sporting Goods shares fall. Anyway, it's the guy from Dick's Sporting Goods is on talking about the earnings. Okay, well, so that's the rolling total return. We can go here. I mentioned the blocks dividend yield, and I put it in here. Not really the yield. I put it in cents per share. There it is, 44 cents. Last time they paid 39. The time before that, they paid 57. A lot of people were disappointed with this 39. Of course, the market was, these guys don't sell options, so they don't have that downside buffer to the extent that an option selling program does. They sell total return swaps. Well, when the market's getting crushed like it was last week, total return swaps don't do very well. So the dividend pays a little bit less, but I mean, I'm fine with that. I own this one. Market's doing a little better. Dividends paying 44 cents, still not as well as it was doing, back earlier in the month, but we'll see how that one shakes out. We'll definitely see how that one shakes out. You guys behaving yourself in here? Hey, Dan, thank you so much for being here. Oh, I'm really liking the second screen setup. You have no idea. Yeah. Bank account bonus central, your fellow Texan. Give me your name, and next time I'll call it, because it's kind of awkward to call you bank account bonus. If you want to, tell me your first name. I'll try to remember it. Hey, DGen4 Plays. Hey, group. Love seeing these funds. I don't like seeing Bitcoin down, but I mean, after yesterday, it's natural to get some type of pullback. I mean, it's important to see what kind of power the bears have in them. We'll see. We're hoping for that higher low. All I want for Thanksgiving is a higher low and then eventually a higher high. All right. Triple Q down 4%. Many of these funds are over down 10%. That's a lot of ground to recover. Correct. That is. But you saw, but the other side of that, there's always another side to everything in life and in finance and everything. The other side to that is the Qs yesterday were up 2.5%, and some of these funds were up 10% or 4%. So these funds they can make up ground fast. But yes, they do have a lot of ground to make up. November has been a terrible month, especially for the ones that are highly levered to Bitcoin. I'm looking at you, Blocks. Not that Blocks isn't a good fund, but it says in its prospectus it's going to invest in Bitcoin. So Blocks is a bullish bet on Bitcoin. That's all there is to it. Yeah, you get a yield also, and yeah, the yield might be a little bit of a downside buffer, maybe a little bit, but still, blocks is basically a bullish bet on Bitcoin. Don't buy blocks if you don't believe Bitcoin's going up, in my opinion. Definitely don't buy blocks if you think Bitcoin's going to continue to get crushed. But if you think, if you're neutral to bullish, maybe blocks could work. Talk to your own planner. All right. Oh, John. Okay, John, I'll try to remember that. I'll probably have to ask you one more time, but trying to think bank account and John. I have a friend, John, who's wealthy, and I'll try to associate it that way. He drives a Range Rover. He does really well in business. So anyway, he's a Texan also. So anyway, maybe you're him. I'm just joking. But in any event, John, thank you for being here. And any of you other guys want to tell me your real name, I'll try to remember so I don't have to call you by your handle. But if you like being called by the handle, that's fine too. Hey, Marcus, how is Marcus doing this morning? All right, so let's look at some other stuff. Let's go back here to the charts. I mean, I'm a little bit, what's going on here with Bitcoin? Did we look at Bitcoin this morning? I don't think I did. I think I was so excited about the other stuff. Anyway, I don't know if anyone's got a chance to see my video that I made, but it's really good. I'll kind of recap it for you guys if you want to recap. All right, so Bitcoin, at least we have something to trade against or something to look at. And I'm using IBIT because this is how most of these high yield funds trade Bitcoin. I mean, is that crooked? Why is that crooked? I thought I held the non-crooked key. Okay, there it is. Anyway, so that right there is an area where, I mean, we'll see. Bulls would like to get it on the other side of that and get rid of that gap. Kind of that we had a down gap here in IBIT, and bulls ran it right through there. So there was no sellers there. That was just this was a bear trap. Hopefully this is a trap too. If we run on the other side, we'll see that it was a trap. Anyway, hopefully this is a bear trap also. We'll see. If we only knew the future, if we could only predict the future, it'd be a heck of a lot easier, wouldn't it? All right, so let's look at some other stuff. Excuse me. All right. So let's look at some other stuff. Yeah, the video I made this morning was good. Probably nothing you guys haven't heard before, but I worked really hard on it. But yeah, you make a good point, that guy. I mean, for sure. These funds are a lot more risky. For one thing, it's because these funds pay a yield. Remember, the yield comes out of NAV. So that's one reason why they're underperforming, especially on a NAV basis. But yeah, for sure, these are risky. But also the other thing is because they use higher implied volatility stocks generally than the indexes have in them. And maybe that's why QLDY isn't down as much, because QLDY sells options on the entire Qs, but these other ones are picking subsets with a lot of, crazy stocks in them to try to boost the yield. So they are definitely risky for sure. All right. So let's see what else we have. Look at this. I was really proud about this. We can look at these. We can look at the actual trades in ULTI. We can look at the stocks. We can look at the options. We can look at the change in holdings. ULTI, though, is basically, I already did a video on this morning. They're hedged pretty well. Like on AI, yes, they have AI stock and they have an AI option overlay. They've sold calls and sold puts. That'll bring in at the same strike. So they've sold a straddle. That'll bring in good money, and that's how they pay these high yields. But then they've hedged their straddle by buying out of the money calls and by buying out of the money puts. And they bought double out of the money puts. And that totally cuts off any possibility of loss or bag holding in this stock under 12.5. Anyway, that's kind of their usual deal. On ULTI, the thing that I thought was most interesting on this was they have stock. 5.7% of the portfolio is in the Qs. And unless AI got this wrong, I had AI scrape the positions, and there's no option positions in the Qs. So they're just straight long the Qs. They bought 5% of the portfolio in the Qs. And as of yet, it doesn't look like they haven't sold any premium. They haven't hedged. Anyway, whatever. It's just a straight bullish bet. They don't You know, in these prospectuses, it pretty much says, especially on these 4 companies, they can basically do anything they want, especially on ULTY and K yield. The world is their oyster. They do whatever, they can do whatever they want. In any event, so I thought that was interesting in ULTY. They're just straight long in the Qs. Also, ULTY is also straight long in IBIT. They've also made a bullish bet on IBIT. Now, that's not panning out very well this morning, but it's not a, this is not a, let me see here. Let's see. Well, they have 2 tranches of, let me see here. They sold calls at the 50 strike. They sold puts at the 41 strike. And then they bought some puts at the 42.5 strike, and they bought puts at the 44 strike. So they're actually no, I was wrong on that. They've actually have sold premium, and that's a hedged play. Maybe it was this one I was thinking of. Gosh darn it. All right. My bad. I just figured it out. Of course, they sold options on the Qs. It didn't show up as the Qs. It showed up as Invesco, but that's the Qs right there. They sold a call and they bought a put. They have a caller on. Sorry about that. If you watched the video this morning, I said they were straight long. I didn't catch that was the Qs. Okay. Well, in any event, so we have that, and then we have Blocks. Blocks is doing the same old stuff they always do. They didn't have any changes, and they're selling lightning spreads, which is stock plus a bull put spread. For instance, they have shares in bullish, and then they sold a put at the 36 level. They bought a put at the 34 level. They do that for a credit. They pay the yield with the credit, and then a put spread doesn't get in the way of the stock. They're basically betting on bullish to go up. If it does, puts expire worthless, the stock goes up, whatever the stock goes up. This is the lightning spread strategy. And then K yield does all kinds of different things. They mainly do covered calls. Most of their trades are covered calls. In AMD, they have a covered call. They have shares, plus they sold 23, plus they sold 23 options. I mean, they basically do covered calls, but Howard has some interesting ones in here. He's straight long on IBIT. He bought a call and sold a put. That's a synthetic. And he had this on yesterday. So IBIT did well yesterday, not doing well this morning. But that trade may bring in a little credit if the put was more than the call. But basically, that's not what you'd call an income trade. He's straight long there. And then he's also straight long premium on the Qs. Now, he's long calls and he's long puts. That's a volatility strangle. Anyway, that's QILD. So that's the recap on that report. Let's look at the old index buffer report and see what's going on with the index buffer report. You think feet and 5E are leading the way? I bet you they are. Probably on the downside this morning, sure enough. Feet down 1.7, 5E down 1.6. Same thing as these other stocks that that guy was talking about. The market's down 4% and these other stocks are down 10 or 15%. Same thing with feet and 5E. They're down multiples of whatever the market is, or up multiples. It depends, but they're more concentrated, and so are these other things for that matter. These ones that we follow, ULTY, ULTI, and all those ones are purposely doing that. They're trying to do that to boost their IV. They sell options on high implied volatility stocks, which go up and down more than the underlying. But sure enough, feed and 5E's down the most. Let's look at some good news. Salty and YQQQ are up. I mean, that's good news for me. I have those. But of course, I also have Blocks, and Blocks is getting killed. Blocks is down nearly 5%. I also have, I don't have that one. I also have WPay, and WPay is getting murdered. I look at ULTY, it's only down half as much as WPay. Once again, that's why I like ULTY. It protects capital really well, at least on down days it does. Maybe a little too steady on up days too, but I mean, it does well on down days. All right, what are you saying here? That guy, I'll try to answer these questions. John, I'm going to remember you because my friend's name is John, and he's a Texan also, and he has a big bank account. So I have to associate stuff. That's hard for any of these options. Yes. To beat the Qs. Yes, absolutely. In fact, you almost never see these beat the Qs. That's kind of what my video was about this morning. There are some cases, And there's a reason for that. The reason is because there's no free money. When you sell options, you get a little, and it's also because of risk and reward going hand. When you do an option selling strategy, you get a little bit of reward, and the reward is you get some of your money back, or you get money early. It's almost like taking out a loan against the stock's upside or whatever. So, but that's the reward. The risk for that trade is generally you will lag the underlying. And I made a video about that this morning. Generally, not always, and it depends on other factors. But yeah, you're very true, that guy. If you want to put your first name in here, I'll try to remember your name too. But anyway, it's fine if you don't. S-bar and XV and total returns are very competitive. Absolutely. I'm really liking QLDY a lot as far as competitiveness goes. And that one came out from Defiance. No one ever talks about that. I mean, I do, of course, but I'm a big believer in the lightning spread. But in any event, you're going to use S-bar to pay for your home equity loan. Congratulations, that guy. Yeah, S-bar is a good one. Super steady. I agree with that. Hey, Penelope's here. I've seen you in here before. I remember you. S-bar and sell put spreads at the VIX hits 28 or higher. Yeah, S-bar does a great job. And then if that happens, the VIX goes up that much, they sell put spreads and they bring in extra yield. Yes, absolutely. There's another fund coming out that's also doing similar stuff with VIX, and it's called ONO. It's more like a hedge. Well, I need to make a video on that, but no, that's a great point, that guy. I appreciate it. Charles, okay, that guy, and it's Charles. Oh, Charles, what the heck? I haven't talked to you in a long time. Okay, well, heck, yeah. Charles, yeah, I remember you. Of course. How are you doing, Charles? I'll try to remember, but that guy, I'm trying to think how to associate it, but that's great. Yeah, Charles, I always enjoy hearing from you. Honestly, okay, let's see what Skeptic is saying. Honestly, all of these barrier ETFs are looking good. They absolutely are looking good. Do you think they would have looked as good? Do you think they would have looked as good last, May, June, and July when the market was melting up? I don't know, possibly, but there's always a catch to everything. But yes, in a down market, they are really looking good, and not to mention CAIE. CAIE is looking great, but it's basically a barrier fund with a different, with auto callable bonds. But the auto callable bonds have a barrier feature, basically. Hey, Mayor, how are you doing? I like that email you sent me yesterday. Mayor sends me really good emails. If anyone else wants to email me, I only check it about once a day or whatever, but it's better to hit me up in Discord or whatever. But sometimes I only check it once every 2 days or something. But my email is maxconvexity@gmail.com. But Mayor, I really appreciate all the stuff you send me. So thanks in advance on those barrier funds. Yeah, Marcus is the one we need to thank. Not only Marcus, also Charles. Charles is all over these. S-bar has a guaranteed return if SPX sells off. Yeah, not only that, they also have tranches, so it's not. You know what I'm saying? I think they put on different barriers every week. So even if it does, hopefully all the barriers will. You know what I'm saying? I know Charles knows what I'm saying. All right. Well. All right. What else do we want to look at? So let's do this. Let's do this just in case I missed anything. Let's go over here to stocktools.app. StopTools.ax. I have .app/max. I have an affiliate code here. This is a good code. I mean, a good tool for option traders too. There's all kinds of stuff in here. But I'm going to look for the ETFs right now just to keep it simple. Let's just line up all these ETFs and see who's doing well. My buffer report just has the ones I'm interested in, but let's look at all of them because you guys might be interested in more than I am. And let's just line them all up and see what we're got going on at this early point of the day. So this is 1 day change. Sometimes I see stuff in here that I don't notice in my own report. Like I say, you get a free month if you sign up for this. I really like this tool, stocktools.app/max, but there's all kinds of stuff in here. Every type of calculator, there's AI, there's all kinds of stuff that option traders might might use. Okay, but let's see what is going on at this early point in the day. AMDW was down the most I just saw. Anyway, dips is up. Okay, well, the market's selling off. Winter's up. That doesn't count because it's inverse. I mean, it counts, but anyway, GOW is doing the best out of the bullish funds. We have what's that one? METW. I'm drawing them. Oh yeah, Facebook. It's Roundhill's version of Facebook. Great job. That one's doing really well. Look, that's up 3.3, where the underline's just up 2.2. I'm really increasingly liking WPay. A lot of the option bros, not anyone in my room, but just people on Twitter, were saying that, WPay doesn't sell options. It's not a cover. Okay, well, yeah, true. But I mean, they're still basically fishing in the same pond, a total return swap, an option. I bet you their counterparty who's giving them selling the total return swaps to them is selling options. I bet you they are. Who knows? So anyway, but it's a good plan. Look, because the other thing is you can get more upside. It's not only the little bit of leverage they use. It's also the fact that they don't have a call or a call spread sitting on top of the market to hold them down. So in any event, look at DraftKings up 2.5. That's Dre. So that one is from Dre's Yield Max, right? That's a newer one. GUI is Yield Max. Now the Yield Max ones, like I say, they have a call spread sitting on top of them. So sure enough, they underperform just even on a daily basis. They underperform the parent. But to be fair, GUI pays a higher yield than GOW. So, it depends. I mean, either one of them could work for you or neither. Maybe Google would work for you also. I mean, anyway, Fiat's inverse, crashes inverse, but let's see the other good news. We have Abney from Airbnb doing well. AAPW, another one from Roundhill, up 1.8, where the underline's just up 1.1. Well, I really like the way that looks. We have Goop from Curve. Curve does a great job. It's up 1.6. Dizzo's even up. Facebook or Fibby's up. RDTE is up because, the Russell is up for some. The Russell and the Dow are up this morning. Bitcoin's only down 2.3. I think it was down 2.7 last time I looked. Hopefully it bounces or at least makes a higher low. Anyway, Carvani, Appy, look, even Marnie's up today. What's the world coming to? And look, Marnie's beating the parent today for some reason. Doesn't usually do that, and it definitely won't do that over time, but not usually on an up day for sure. It beats the parent on down days. A lot of these do, but that's like kissing your cousin or something. Anyway, all right. Well, that's it for stocktools.app. Be sure to check out my affiliate code if you guys are interested. Let's see what else I have to show you guys. Let's see what you guys are talking about. Oh, we have Dylan in the house. Hey, Dylan. How's your trading going this morning, Dylan? Are you do? Oh, you're done trading for the day. I read too fast. Okay. Well, hopefully that means hopefully that means you hit your profit target, not your stop loss, but whatever the case is, discipline's the big key. We have Charles in here, who's otherwise known as that guy syndrome, and he's a very experienced option trader. I always enjoy my conversations with Charles. I bet Charles knows about CAIE, but maybe not. But I bet you Charles already has CAIE. Charles, Charles has been I think Charles and I have known each other this channel's been around for 2 years, and Charles and Norman and Tom and were, in the first crew of people that I met. And I always appreciate those guys, but I appreciate the newer guys also. I didn't meet Dan until I don't think until I started my Discord server, and that's last October. So my Discord group's more than a year old too. I have a whole nother group of friends that I met through Discord, Dan and Marcus and all the rest. But yeah, Charles is an OG. Charles, Tom, Norman, those guys are OGs. Tiger on Fire, he's an OG. Okay, Dan, what are you talking about here? NVIDIA has all income funds associated with it getting murdered. Matthew Tuttle's newsletter had it. I haven't had a chance to read it. I've been so busy. I was up till 3 doing my new video. Then I got up this morning and watched the premiere and commented on it. And then I made my video on ULTY versus ULTI, my daily ULTI video, blocks and K yield also. And then I went straight from there into here So I see a nap coming on. I'm dog ass tired. All right. All right. So DJN saying, yep, they picked up Google chips, which are quietly becoming a little niche in the semi industry. Yeah, I know it. That's all I've been hearing about on. That's all I've been hearing. In fact, they're showing the graphic right now. They're showing Alphabet up 1.6 and Nvidia down 5.8. That's all people are talking about. You know, I'm glad that, I mean, obviously I like ULTY regardless. I think it's a good strategy, but I like a lot of these. I like WPay, I like, you know, whatever. But ULTY picked up Google the day before Warren Buffett announced they were buying it, or that day Warren Buffett announced he was selling Apple to buy some Google, I think. And that was a week and a half ago. And they've ridden it all the way up. They did a great job. Also, one of these ETFs, I forget who it was, has SanDisk in it. And I heard a rumor in my Discord that I forget who it was, maybe Scramble or who knows, said that SanDisk might get included in the S&P 500, which they did. So that was a good trade also. I know it. I'll get you the video on I'm not sure I understand it completely. It has like 5 strategies. You know, it's using the SFAL strategy, but then it's using another strategy, and then it's using a strategy on UVXY or but anyway, I can't wait to get it out. I'll get it out. I just wanted to get out more of the general interest videos first. All right, Dylan, what's going on, bud? All right, QQQ puts after 5-minute open, they dipped, then averaged up and waited for a pre-market low to break, took the ride down, flipped to calls, and then took some profits. Seen a bull trap, so back to puts. Great job, Dylan. You made about 40% of your yesterday's losses. Yeah, I know yesterday was a tough day. Okay, well, in honor of Dylan, let's go look at this. Let's see. I need to work this a little better. Let's go to here. Let's just slap on a 5-minute Qs chart. Let's see what we have. Well, there we have it. Yeah, the Qs had a down gap, probably stabilized a little bit, and then they flushed. Yeah, Dylan took profits and made 40% of his money back from yesterday. Yesterday, I think you kept trying to sell the rip, and it kept ripping still or whatever. That happens. I think that's what you did. I may not be totally right. Look at this. Look at this huge POC right here. This price, this 605 level, you know, has recently been stuck there, but that's an old level too. It's the highest volume on this chart. So, so there's 2 ways to look at it. You know, in the bearish case is we got ahead of our skis. We come back and check the most recent POC, point of control, and boom, then sell it. But anyway, it's bearish below, bullish above. We really want to get over 605, or the neutral case is just to get stuck at 605 and trade here for a little while, like we did yesterday afternoon. That's the neutral case. But the bullish case is we built a base, we made a higher low. We're going to blow through 605 and go check this point of control at 607 or 611. Those are minor points of control. You know, eventually the bulls want to check this point of control at 620, 621. They were definitely comfortable, and there was definitely two-sided action up here for a while. That's the way I see it. I totally oversimplify volume profile and stuff, but that's my analysis of it. Let me put it back on 30 minutes. But, you know, we also are dealing with this, you know, descending trend line. And, you know, bulls are also wanting to get it above there, but on the 30-minute time frame, there's definitely a pocket 601, a huge point of control, but there's another one at 608, 609. Anyway, and that's about where this trend line is. So hopefully it looks like we're going up now. Looks like we made a bottom, left behind a rejection tail right there. Maybe we'll go up today and test the trend line, or, you know, we'll see. Bullish above, bearish below the 601 level. That's the way I see it. All right. But yeah, I'm glad, Dylan. That indicator for volume on the right is called Lux Algo Liquidity Sediment Profile. And there's tons of ones. I really like this Lex Algo. You could see even in the profile if it was mainly if it was buy action or sell action. Um, you know, anyway, and some of the other ones don't do that, but I really like volume profile. Now, the weaknesses are this just tells you the volume profile for whatever setting you have. So, like, I have it on the past 1,000 30-minute bars. You can make it higher, you can make it lower, but I just leave it on 1,000. But what I'm saying is if you put it up to 2,000 or put it down to 500, you get different pocs. I just keep it the same every day. It looks at 1,000. That look back period's 1,000 bars. And in my head, I know what it's at. But I really, really like volume profile. It kind of helps you, let you see inside the market. And I like the low volume nodes to play turnarounds. Like right here, lots of times low volume nodes will reverse the trend sometimes, and lots of times high volume nodes they'll get stuck there because there's two-way action there and people are comfortable trading. If you're a mean reversion trader, if it gets too much above the most point of control, you can sell it and try to play it back to the point of control. But you can also try to buy and play it in. A lot of people say to play futures inside out, but then you can also use it in a trend method, and you can say bullish above, bearish below. It's up to the user. But anyway, I really like that. Here, I'll type it in here. Lux Algo. We haven't looked at my pros versus Joe's indicator yet today. Let's look at that. Then I'll probably let you guys go unless you have any questions. Lux Algo liquidity sentiment profile. So I'm trying to think all the stuff I've learned today. So that guy is Charles, and bank account bonus central is John, and he's a Texan. I like my Texans. I'm partial on Southern. I like people from the South. I'm just joking. People from the North are good also. I'm just joking. I just am partial on the South because I've grown up in the South my whole life. I just love the South. All right. Well, so let's look at the pros versus Joe's indicator. Now, this is just a ratio, and there's jillions of ways to do this. This is just a ratio, but let me show you what I have. Like I say, if there's extra questions, put them in the comments. I'll be sure to try to address them. Did anyone see my video this morning? It was a real simple video. You guys have heard me say it a million times before, so I won't. But I was trying to make it simple for folks. All right. So, and what else I have to do is I switch I just do some adjustments here, 9 period, and switch this to EMA. Okay. This is the pros versus Joe's indicator, and it's been flashing red ever since the 13th of November, and it's been a good time to be cautious. But it's been flashing green all of June and July and August, of course, and but then we got whenever both moving averages are red and it's underneath both moving averages, that's as bearish as you could get, or as cautious as the indicator gets. We can overlay it with the SPY on top of that, or the Qs or whatever. And we can see times when both moving averages are green, the market's melting up. That means people are taking off hedges. There's no one buying hedges. But then we can see right here when people start to add hedges, like right in here, that wasn't a good signal. But then again, right in here, both moving averages turned red, and the ratio is underneath the slow moving average and the fast moving average for that matter. That's definitely as cautious as you get, and that's the area we've been in lately. At some point, people will take off hedges and we'll go back to the moving averages start sloping up and the ratio will be on top of the line. Then that's a good time, then it's clear skies ahead. We can see this doesn't look as serious as April. In April, both moving averages went red on the 21st of February. Plenty of warning there. and it stayed cautious until April 24th, and then the fast moving average turned green, so that's like a yellow indicator. But anyway, then it turned full green in June, and sure enough, June the Qs went from 532 all the way up to till next time it got bearish was at 608. So that was a good time for the market. And anyway, then we got bearish again right here on this day, the 13th. And on the 13th, the market had already sold off some. It was at 610, but it got as low as 586. And now it bounced yesterday to 605, which is where we're at now. So we'll see. We'll see. But I like to look at the pros versus Joe's indicator. All right. So Red's here. Hey, Red. So what is going on? Oh, 1 o'clock. Is that tomorrow? Is it already Thanksgiving? What is today? Tuesday? Yeah, tomorrow's Thanksgiving. I mean, tomorrow's Wednesday, then Thursday is Thanksgiving, of course. Okay, well, we only have half a day. I'll be here. But yeah, it sucks for trading and stuff. The thing is, though, on these types of weeks, they're like a short week, the week before the 4th of July, the week of Thanksgiving, generally have bullish biases. And I think we're seeing it. I mean, it's definitely the mood's definitely improved from last week. The other thing is lots of times after OPEX, lots of times the OPEX will change the direction. Well, you look at this chart. Where was the low? The low was on Friday morning. Since OPEX, we've actually we're up from 581 to 603. And it doesn't always work that way, but look at the last OPEX was right here. And the market was at 618. It did go a little bit higher, but by the next OPEX, the market was at, we kind of reversed the uptrend of that OPEX and then went down to this one. And the reason I think for that, Charles could explain it better than I can. He's a real option bro if he's still in here. But I think the reason for that is because people, because options roll off and dealers have to adjust their positions to the new OPEX. And traders also have to adjust their position. So hopefully this next option expiration, which goes from the third week in November to the third week in December, will be bullish and we'll just rock and roll up to about here. Maybe we'll even make a new high. I doubt it, but hopefully we'll at least take back this trend line and rock and roll, right? That's all I want for Thanksgiving is to take back that darn trend line. Hey, Ethan, how are you doing, bud? I do not own any BCS stock myself, but maybe somebody else in here does. You don't think the Yield Max funds that you sold, possibly not. That's what I made that video about this morning, but there's a part 2 coming. But basically, here's the video in a nutshell. If an ETF, any high yield ETF, needs to be up, the underlying assets need to be up 1.3 times at least, but 1.3 times in the case of ULTYs. The basket of stocks need to be up 1.3 times whatever the yield is. So if you have ULTY, forget about ULTY. I know people hate that. But if you have an ETF, random ETF that pays 50% yield, it doesn't matter what the underlines are. Whatever those underlines are need to be up about 65%, which is 50 times 1.3. Sometimes 1.5. Some ETFs are a little bit more efficient than others, but the money doesn't come out of thin air. The money comes out of the NAV. The distribution comes out of the NAV. Yes, the distribution, yes, they sell options, but it still has to come out of somewhere. So, and you guys, I think you guys all understand this. So you can look at any ETF. So basically the video said, if you don't want erosion, you don't like that kind of stuff, you don't want your NAV to decline, I get that. Choose ETFs that pay 8, 12, 14% because their underlines, on an 8% one, you need to have the asset up 12, 13, 14%. You have flat NAV, and the SPY can easily do that, can easily go up 20, 30% in a year and you have positive NAV. But I was just kind of warning people away from the high yield ones. I mean, high yield is great, but I'm just trying to explain the cost. And then I got a comment that somebody said they disagree with me. They were respectful or whatever, but they said, it's the reason ULTY won't go up is because it's totally capped. Absolutely. He's looking a step further. That's true. But all of these guys are totally capped. Every covered call strategy is totally capped to some degree or another. It depends on how far out of the money they go, if they use call spread, whatever. But 90% of the performance of the NAV can be explained by one thing or two things. One, what is the yield? How much yield does it pay? because that's how much money's coming out the door. That's the headwind it has to overcome. And the number two thing is what's in the basket. Because some baskets, like some baskets, or some individual stocks like, CONY. Well, what does that pay? A 50% yield? But Coinbase has no problem going up 60 or 75%. But just know if you're playing Coinbase, or playing Coney, you're betting on Coinbase to be if you expect a flat NAV. Some people don't care about a flat NAV. It's an income fund. They just don't want the NAV to go down too much. That's kind of how I am. They're looking at the whole equation. But for people that are expecting a flat NAV, just don't get high yield funds, because the higher the yield is, the less chance you're ever going to have flat NAV. But yeah, so I'm agreeing with you, Fish. I'm agreeing with you. It is possible mathematically that some of them might, but it's so far-fetched at this point. If you're one of those people that's interested in NAV, absolutely. So I'm agreeing with you. You're making my point. And the guy this morning in the comments was right. I mean, ULTY's totally capped on the upside. So is triple QI, totally capped on the upside. Okay, triple QI pays 14%. So if its underlines, which is the Qs, go up 20% or whatever, it's flat. And if it goes up 30%, it's golden, whatever. ULTY is asking their basket to be up 100% or something. It's just the math. Jack's made an appearance this morning. He's over there passed out. He's over there laying in the sun. But yeah, he made an appearance. Go roll it back. He was here right at the first. Anyway, all right. So, Red, you're glad you sold NVDW last month too. It's several dollars lower now. Yeah, evidently, I mean, NVIDIA is getting killed by Google. I mean, at least in the news or whatever. Everyone, it's on the wrong side of the news flow for sure. Also, the government shutdown with all the funds piling up. And once reopen money flooded the market as well. True, I was looking at OPEX, but that was also the time frame of the government shutdown, for sure. Your dips is approaching NAV positivity. Well, yeah, that's awesome. Unfortunately, it's because NVIDIA is getting crushed. But yeah, dips is, but that's awesome. I mean, it just works in reverse. I don't know what dips pays on a yield, but say dips pays 40%. So that's a bet that NVIDIA is down more than 50 or 60% on an annualized basis. The usual multiple is about 1.3, 1.4, something in there. I'll run it on everything. It doesn't matter what it is. You can look at any of them. It's just the high yields a tax on the future upside of the NAV. You guys all know that because I say it 3 times a day. But I wrote a script and I made that video and tried to explain it to the masses. Greg, you worry about NAV because the NAV goes, so does the dividend. Absolutely. And I'm not saying, so for you or for people that are worried about the NAV, I'm not saying if it's right or wrong to be worried about the NAV. I worry about the NAV too. I worry about the total return, but yeah, then of course the NAV, because the NAV affects the dividend, unless you drip, of course. If you drip, then it's kind of like gaming the system. But yes, without a drip, you still get the dividend. You put it in your bank account. It counts towards the total return. But as the NAV goes, so does the dividend. I agree 100%. So if you're interested in buying a stock where the dividend stays consistent, same thing applies. Choose a lower yielding one. Choose triple QI. Choose T-SPY, TDAC. Those are all great funds but the reason they're so much more stable is because they aren't sailing into such a headwind. When you're paying, 50, 60, 80, 100%, you're sailing into a headwind. Now, some of those can definitely still be good investments in certain circumstances. You could, on a total return basis, but they're always lousy investments on a NAV basis. If you're worried about NAV, absolutely. Okay, so Mayor's worried about GDXW. You want to pull up a chart and not? Oh, okay. Well, I don't know if a chart will tell us that, but let's see what let's see what GDX is doing. All right. Well, GDX looks good. Now, GDXW, I mean, I don't know how they pay too much yield. They just pay whatever their total return swap makes. I mean, I don't really understand the mechanisms, but the math works the same way. They still need if they pay 40% yield or whatever, it's still a bet that the underlying assets will be up some multiple more than 40, 1.2, 1.3, 1.5, whatever. Maybe I should do a study just on round hill, because it is a slightly different mechanism that they're using. But it's a bullish bet on GDX, and GDX has been pretty bullish lately. I'm hearing that gold's going to go back and make an all-time high. I was listening to somebody last night. I mean, who knows? But if that happens, then your GDXW will be fine. But if gold, fails here, none of the GDXW, GDXY, won't be that good. All right. Hey, Loner, I haven't seen you in here before. Thank you for being here. Or if you have been in here, like I always say, maybe I just don't remember. NAV was key to me. Switch to curve. Absolutely. Absolutely. Less pay, but have upside potential. Absolutely. Absolutely. 100%. 1000%. 55 Loner likes curve funds. And yeah, if you hired as a fiduciary, a good fiduciary, absolutely. Howard is a friend of the station. We have lots of friends of the station. We're also friends with Matthew Tuttle and lots of folks. But yeah, Howard does a great job. A great job. Okay, GDXW, 55% yield. I didn't sign up for a yield. Oh, you're saying it pays too much yield. Well, I hear you. I hear you on that. I see what you're saying. I got you. I know what you're saying now, Mayor. Let me give you an alternative. What about iGold? I mean, it's not miners, but it's still related, and it does a lot. It's a lot steadier, at least according to the max factor. Let's pull up a few comparisons here for you, Mayor. Let's see what we have. It's either iGold or YGold. One of these is really steady. Of course, it doesn't pay as much yield, and so that's the other things being equal, just choose one with less yield. But still, there's better ones and worse ones, even with the less yield. So let's look at iGold versus, we'll just look at iGold versus GDXW just to see what's kind of been going on since inception. I think I get iGold and YGold mixed up. And once again, these aren't the same underlines. Miners are different than gold. They're fishing in the same pond, like I always say, but it may be on different sides of the pond. Miners have slightly leveraged upside compared to gold. Anyway, sure enough, the miners have done better, but I mean, they haven't been out long enough GDXW just came out. But yeah, I mean, I can see that. Look at this thing. It's already paid $1.50. I mean, at that rate, it's going to pay about $20, $25 or something. So yeah, 50, just like you said, 55%. Yeah, I'm with you on that. Whereas iGold over the same period paid 14 cents. At this rate, it's going to pay $1.50, something like that. So obviously it has less of a headwind, and you have you have more upside potential. But they're two different underlines, so that's probably not the best comparison. Let's do GDXW to GDXY. At least they're fishing in the same pond in the same side of the pond too. GDXY. GDXW is a little leveraged, and you can definitely see that. I mean, it's hard to tell on this short of a time frame. Once again, you can look at the dividend, though. This one GDXY paid 61 cents. So that comes out to like $8 if you annualized it, something like that. So about the same. It looks like about 50% also. So a decent comparison. I mean, if they both pay the same yield, I mean, I think I like GDXW. If GDXW, is that in WPay? If it is, I have it. And I have GOOW, which has been doing great lately in WPay. I mean, I don't have it in individual stock, but I have it in WPay. Joe's back. Hey, Joe, how are you doing? Buff is a buffered ETF similar to barriers, but the downside mitigation is always active no matter how far the underlying goes down. Okay, that's interesting. I haven't heard of that one. I'm sure you probably put the prospectus in Discord. If you have it, if anyone has that prospectus, put it in Discord. ETF prospectus. Let's see what Google has. Of course, there's other people trying to get in on the trying to SEO the results. So I'm never sure which one's actually, but I think it's Innovator. It's an Innovator. So here we go. Power buffer. Heck yeah. Innovator. I mean, these guys never met a buffer they didn't like. So they have laddered 15% power buffered ETF. So that's similar to XV. That's because it's XV is also, I think, a 15% buffer, but this is a power buffer. And I think you explained it already, Marcus, but hey, hang on. Let me get the graphic off the screen. All right. Buff holds an equal amount of the 12, 15 power buffers. Okay, so it's a fund to fund of these. So it has monthly tranches. It's engineered for S&P 500 exposure to a cap with the built-in risk management for the first 15% of losses over the 12% outcome period. Buff is designed to provide efficient access to a 15% buffer strategy while at the same time and resources required to, oh yeah, so you don't have to buy all of them. Some people are probably buying all of them. So let's look at the results in 2020 when the market was way up. Buff lagged, but would have. I doubt Buff was around, but they probably running the strategy over the back test. But in 2022 when the market got crushed and the SPY was down 19.4%, or maybe the SPY was down 13 and the Qs were down 19, whatever. Buff was only down 4.5. That's good. Or the Buff strategy, let's say. Then 2023, the market went up 24, and Buff actually got some upside too. Actually beat bonds. It beat bonds. Okay, well that's good. It beat bonds right here in 2023 on the way up, and it beat bonds here in 2022 on the way down. That's really good. And then it also beat bonds right here. And then it beat bonds again in 2024. Yeah, good call there. And so here you have all the individual things because like the one that came out in October is already close to the barrier. The one, the November ones busted the barrier, or busted the starting buffer or whatever. But it depends on when they, anyway. Yeah, that's a good catch, Marcus. That is a good catch. Okay, what's going on? Mayor WPay as of today does not. Okay, well, I for some reason I didn't think that. I think it only has the stocks and not a commodity. Well, anyway, it's fine. It's fine. I have K Gold and K Silv I have about. I think together I have 9% precious metals. I think 4.5 in K Gold and 4.5 in K Silv. So I believe that Howard's a good fiduciary also. That's why I have those two, and also have K Yield, but heck yeah. Okay. It has GOW, and that's all I care about because GOW has been a monster. XV is a target barrier, I believe. Oh yeah, you're right, Marcus. I oversimplify everything, but yeah, that's correct. Thanks for the correction. WPay is stock equity only. Yeah, I hear you. But they probably don't want to complicate it with commodities. And although commodities are non-correlated and might give a little bit better risk-adjusted performance, but but they're who knows? They probably just want to include all the stock ones together. Let's think about WiMAX. WiMAX just has everything in the whole company. Now they don't have the target funds. And they don't have the stock index funds like SDTY and QDTY, but they have every individual stock in WiMAX. So that would include GDXY. Because GDXY is based on a commodity, but it's really a stock. Anyway, yeah, Joe's here in the house. Dan's here. Everyone's here. All right, guys. Well, I'm beat. I'm tired. I'm going to take Jackson a walk, and I'm going to take a nap. Like I say, I was up half the night working on that darn video. I wonder if anyone even watched it. No one's been watching my videos lately. That's fine. You guys, I don't want you guys to go watch it. It'd be boring for you guys. It's nothing that you haven't heard a million times in this room. All right, guys. Well, thank you very much. And you guys have a wonderful day. And I will be back later. Don't forget, not financial advice. Please consult a professional advisor who knows your exact situation. I try to give decent ideas for me, but it could be totally the wrong idea for you. Also, don't forget, if you care to support the station, give me a tip. You can always do that at paypal.me/maxconvexity. Other than that, I will talk to you guys later. See ya.